In today's video, I want to teach you in what situations you can use candlestick patterns in trading. This is not a guide to different types of candles and patterns, but I want to show you how you can use them in practice. So if you don't know about different types of candles and candlestick patterns, I have a complete guide on this subject. The link is also placed in the description, and I highly recommend you to watch it later so you learn how to identify these patterns on the chart. Without wasting any more time, let's get started. Alright, let's begin with the first one, continuation of trends. As you know, there are some continuation candlestick patterns that form somewhere in the middle of a trend, and they tell us that the trend is probably going to continue. We have different continuation patterns like upside, downside, Tasuki gap, falling, rising windows, side by side lines, among others. For example, here on this chart, you can see that we are in an uptrend, and here after this pullback, the price is advancing. Here in this part, we have a continuation pattern, rising three methods, and this pattern is forming here near the previous high. This pattern gives us the probability that the prior advancing of the price is going to continue, and if we also check the volume, we can clearly see that for this candle we have increased volume. Having this pattern here in this situation give us the signal that the price is going to advance more, and you can see how the price continued its prior direction. To know the complete list of continuation patterns and how to correctly identify them on the chart, make sure you check my tutorials later. The next use case of candles and candlestick patterns is identifying changes in the direction of the market, and for this purpose we have many patterns like engulfing patterns, dark cloud cover, stars, harami, and many more. These types of patterns show the possibility that the current trend may stop and the price may reverse, or the price may go to a trading range. Actually, these patterns show that the current trend is weakening, so we can have a reversal after them or range market. For example, here on this chart you can see that the price is in a downtrend, and here we have a reversal pattern. This is bullish engulfing, and it gives the possibility that the prior trend is weakening, and you can see how the trend stopped and the market went to a trading range. Or another example, here on this chart you can see that the market is in an uptrend, and here we have a bearish engulfing pattern, and you can see that after that we had an instant reversal and the market turned to a downtrend. The third use case of candlestick patterns is identifying corrections and end of corrections. In other words, pullbacks. As you know, when we have a reversal pattern, it doesn't necessarily mean that the trend is going to end. It can also be a signal for a pullback. If it's a pullback, so the price is gonna stop somewhere and turn back in the direction of the prior trend. By the help of candlestick patterns, you can discover end of the pullbacks and enter a trade in the direction of the current trend. For example, here on this chart, following this advancing of the price, here you can see that evening doji star pattern formed, which is a bearish pattern, and after that the price declined, but it was just a pullback within this uptrend. Here at the touching point of the trend line, which is considered a support level, you can see that a bullish harami pattern formed, which is a bullish reversal pattern. Having a bullish pattern here at this support level gives us the signal that the price is going to advance, so we can conclude that this is probably end of the pullback and the price is going to advance and make a higher high. Again, here on the touching point of the trend line, we have a bullish candle. This is hammer, and as you know, it's a bullish pattern. It shows that market participants rejected these lower prices. Having this bullish pattern on the support level gives us the possibility that the pullback ended and the price is gonna advance. Here at this point, dark cloud cover formed, which is a bearish pattern, and here we have two spinning tops, which shows indecision, and this is happening near the support level, which is a bullish signal. So you can see how by the help of candles and candlestick patterns we can know how the market participants are reacting, and so we can identify pullbacks and end of the pullbacks. Another use case of candlestick patterns is discovering bounces on support level and drops from resistance level, especially in trading ranges. For example, on this chart, you can see that the market is in a trading range in this part. Following this uptrend, here hanging man formed on the chart, which gives the probability that the advancing of the price may stop and the price may reverse. Following this declining of the price, piercing pattern formed here, which is a bullish pattern, and you can see how the price advanced after that. Now the price is bounded between these two levels, and you can see whenever the price reaches to these levels, we have reaction of market participants. Here near this resistance level, we have a spinning top, which is bearish in this situation, and here we have hammer candle, which is formed near the support level, and this is bullish. So you can see how by the help of candlestick patterns we can identify bounces and drops, especially when the market is in a trading range. The next use of candlestick patterns, breakouts. They can also help us with confirming breakouts. For example, here near the support level, first we got two hammers, which are bullish candles in this situation, then a spinning top, which shows indecision, and again another hammers. These repeated long lower shadows show that we have signs of increased selling pressure because the bears were strong enough to push the price down many times near this support level. And finally, you can see that we have this long red candle that broke this support level. This candle shows significant significant selling pressure. And if we check the volume, you can see that the volume also increased with this candle. So we can conclude that this is a valid breakout. Another use case of candlestick patterns is identifying false breakouts. For example, here on this chart, you can see that the market is in a trading range, and at this point, you can see that this long green candle broke this resistance level. At first, it seems a valid breakout since the volume also increased significantly, but it was a false breakout, and you can see that instantly we had a very strong red candle engulfing this green candle, and you can see how the price declined after that. So if you entered a long position here, which was a wrong trade here, by the help of this signal, you could enter a short position and covering that trade. Following this move, you can see that the support level was broken here, and here you can see that we have a engulfing pattern, a bullish engulfing pattern, and this shows increased buying pressure. So here you can exit your short position and take your profit, and you can see that after that the price advanced and returned back to the trading range. So you can see how by the help of candlestick patterns we can identify false breakouts. And the last use case of candlestick patterns that I want to cover in this video is pullbacks after breakouts. Many of the times when a breakout happens, we have a pullback and retest of the broken level. For example, here on this chart, you can see that this resistance level was broken here by the help of this long green candle. And then we had a pullback and retest of this broken level. This level is now a support level, and we expect that the price bounces from this level. So having a bullish candle or pattern here gives us more probability for advancing of the price. Here you can see that a piercing pattern formed, which is a bullish pattern, and having it here near this support level, it's a strong signal that the price is gonna advance. So by the help of candlestick patterns, we can also discover how the market participants are reacting to the broken level after a breakout. Alright, in this video, I showed 7 situations where you can use candles and candlestick patterns when you're analyzing the price action. Make sure you check my complete guide to candlestick patterns, because there I explain all different types of candles and candlestick patterns and how you can correctly identify them on the charts. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.